ever wondered what happens after death to an equity release loan? If you're not considering equity release, you might be missing out on a potentially significant financial opportunity. Let me explain why. Let's start with the basics. Equity release allows older homeowners to access funds without regular payments. The repayment comes into the picture when the home is sold, upon death, or moving into long-term care. This process can be understood better by discussing two types: lifetime mortgage and home reversion scheme. A lifetime mortgage doesn't require monthly repayments, and instead the loan amount plus interest accumulates and is repaid when the house is sold. On the other hand, a home reversion scheme lets the company buy a share of your property at a discount, with the understanding that they'll sell your home and recover their investment once you pass away or move into long-term care. What happens upon death? Well, if you have an equity release loan, it's repaid from the estate. If the beneficiaries want to keep the property, they may have the option to pay off the debt. An essential term to understand here is a negative equity guarantee. Even if house prices fall, equity release can complicate probate, but providers often have dedicated teams to help with paperwork and formalities, so the process might be smoother than you think. This discussion brings us to a crucial question. Why release equity? The most common reason is to make retirement more comfortable. It might help you retire early, fulfill your bucket list dream, or even repay outstanding debts. If house prices fall, you don't need to worry, as the equity release guarantee ensures that you won't have to repay more than what the house sale fetches. This is one of the most attractive aspects of using an equity release plan. Another frequent query is about paying tax on an equity release. Well, the answer is no. The money you receive from equity release is not subject to income tax or CGT, capital gains tax. There's no catch with an equity release if you understand what an equity release plan is and what it isn't. Research and, of course, professional advice can help you make an informed decision. And does equity release interest stop on death? Yes, the interest added to a lifetime mortgage stops being added when the final homeowner passes away. It's essential to consider every aspect before making a decision, so best to think carefully before securing a loan against your home. If you're interested in seeing if you could release equity, simply click the link below and fill out the short form. It contains a few questions like your property value, date of birth, and it'll give you access to quotes tailored to your circumstance. It's totally free to fill out and, of course, won't affect your credit score. Click the link below, fill out the short form to try it out.